Good morning team, Mark Treadway here. Let's map out the key commodity moves and geopolitical drivers you need to know for the week ahead. Oil prices are up this morning on optimism that US demand will rebound as the government shutdown is close to ending, despite lingering supply glut concerns. China's oil imports have fallen for a third straight month, pressured by earlier high prices. But with crude now settled lower, Chinese refiners are likely to ramp up buying soon. If you're trading in oil, then think of playing near-term bounces, use options, keep tight stops and be ready to fade supply-driven rallies as inventory risk persists. Track government policy and inventory data closely for the next leg. Chicago grain futures, soybeans, wheat, corn are rallying today as traders anticipate restored access to critical U.S. agricultural export data. China's one-year trade truce with the U.S. has eased tensions, but tariffs on U.S. energy exports remain, so watch for further volatility. If you are trading grains, then think of taking tactical long setups on soybeans and wheat, and don't neglect spread trades. Keep an eye out for surprise Chinese buying and use macro headlines as triggers for intraday trades. Gold and silver are surging more than 1% today, driven by Fed rate cut expectations and global slowdown worries. Industrial metals like copper are pressured by weak Chinese demand, but supply constraints, see Glencore and Anglo-American output, and the reopening of global trade flows may spur volatility. If you're trading in gold, then think of building tactical risk-on positions, scaling into dips and using macro data releases to confirm momentum. For copper and aluminium, defensive short strategies remain prudent until China signals a true demand rebound. The US-China trade truce is fragile. Any escalation could immediately impact soft commodities and critical minerals. The Ukraine conflict continues to underpin food and energy price volatility. Deglobalization themes are driving defensive positioning and tactical hedging across asset classes. If you are trading around geopolitics, then think of adjusting your risk metrics and leveraging cross-asset hedges, especially in critical minerals and agricultural spreads. Iron ore remains resilient due to inventory rebuilds in China, even as steel production softens. Soft commodities and energy exporters should monitor Asian import flows for spikes in activity, especially as winter approaches and heating demand ticks up. To sum up, this week's playbook is about nimble risk management, being informed by data, not noise, and using short-term volatility to your advantage.